Vaibhav. In today's session of Visual JForex, we will be continuing our algorithm development using the indicator Directional Movement Index (DX). This is the second part of this series, and in today's session, we will be focusing on getting the setup complete for the buy side execution of the order. Prior to the explaining on Visual JForex board, here I will give you a brief idea how we are going to design and implement this buy order. So we want there should be enough of momentum on the buy side, and for that we will be taking into consideration the price action along with this DX value. And on the DX, we want this output to double in last 2 hours. So we are going to use the last hour's DX value and the value 3 hours back. So there will be interval of 2 hours in between, and in that time interval the value of the DX should double. And on the price action front, we want the difference between the closing value of the last hour and the opening value of the prior candle should be at least more than 15 pips, and at the maximum it should be uh, less than or equals to 45 pips. So we are going to set these two conditions, and I think that should be good enough for looking at the trend. And of course we will be buying only when there is a solid momentum on the buy side, and when it will come for the sell side execution, we will be setting the conditions in an inverted fashion where we will be looking for decline, and that decline should be good enough from the price front, and at the same time the DX value should be shooting up. Now we head back to the Visual JForex board, which has been developed by the Dukascopy Bank SA. Here on this Visual JForex board, these if blocks have been added to define the instrument subscription. The USD JPY is our default instrument, and that is being matched with the candle instrument. Then the position amount was defined at 0. I also use this DX block of the shift value 1 and 3 respectively to look at the price volatility. And as you are well aware that the DX gives the idea of the strength of the trend, not the direction of the trend. So these output values will be utilized to simply see whether the strength is good enough for the underlying trend, and for the trend we will be relying on these get historical candle blocks. And I think utilizing these two values, we will be in a good enough position to pinpoint the entry and exit points, and also the probability is likely to be on our side as we will be trading with the trend. So let us get started. I think I will have to change this look back period from 3 to 2 for carrying out the comparison between the opening and the closing value. So I will change this. Okay, and everything else will remain as it is. These calculations were carried out where the pip size have been defined, and then that was multiplied with the desired variable, in this case 15 pips, and here for maximum difference this is going to be 45 pips. In today's session, first thing we will have to do is look at the actual difference between the closing value of the last hour and the opening value of the penultimate hour. And as I said, then we will compare that difference to this minimum and the maximum difference, and it should be within the price limit. And once we start defining the conditions for the buy side, we will then compare these output values. And for these also we will have to carry out the calculation expression, as we want these DX value should be doubling in last 3 hours. So for that we will have to make sure that this DX13 is more than or equals to twice of the DX17. So we will have to make that calculation as well. Now let us get to these calculations using the calculation expression block. First we will compare the closing value and the opening value of this candle 18 and candle 19 respectively. And candle 18's close should be higher than candle 19's close and also its opening price. Candle 18's closing value I will have to retrieve, and candle 19 candle close, sorry, not close, opening value, and here we will do A1 minus A2. Actual price difference, and this needs to be more than minimum price difference and less than maximum price difference. Okay, now we will need one more calculation expression block. And in this case, as I said, we are going to compare dx13 and dx17, and for that I will have to multiply dx17 by 2. So I will have to create a new variable with the value 2 dx multiplier is going to be a1 into a2 modified dx. Okay, so we have carried out these calculations which are going to help us in determining whether there is enough of strength in the trend, and only if it is the case we will be going for the execution of the order. So now I will have to take logical blocks, trading component. First, multiple action. I will join it for the time being, but I'm sure we will have to again disconnect it later on. And as we are going to need to add more blocks, I will leave out some space. And now we start carrying out the comparison. The dx13 needs to be more than twice of dx17. First input greater than second input. And then we want this difference to be more than PD. In this case, first input again greater than second input, and then we also have to make sure that it is within the reasonable price band. So this should be less than MXP. Now first input less than second input. Okay, so we have defined these three critical conditions, and then we shift our focus to the last hour's price action. We want its closing value to be above its opening value to make sure that prior to the execution of the order there was buying momentum. So we need candle 18's candle close to be above candle 18 candle open. First input greater than second input. We are going to need two of these. And then we compare the last 10 second candles with the look back period of 1 and 2 respectively with the last hour's candle closing value. So here the comparison needs to be done between the candle 20, candle 21 and candle 18's closing values, and for that I will have to take candle 18 candle close as the second variable in both these blocks, and compare it with candle 20 and 21. 20 has the look back period of 1 and 21 is 2. So here this should be first input greater than second input, and in case of 21 it should be first input less than second input. And after that we will be going for the execution of the order. So we are going to need trading block open at market, so the order execution will happen at the market price. First input less than second input, and after these conditions have been defined, we will also have to pay attention to these input variables for these open at market block, and depending on these input we will have the outcome of the trade. So we need to be careful while defining those inputs. Let us now get these blocks here, and then we will see what are the possible combinations for the stop loss and target price in particular, to make sure that we are trading in line with the market movement. And I think we should be keeping the stop loss and target price dynamic. So algorithm is fairly simple for the DX. And now we have to turn our attention to this open market block. Default instrument will remain as it is. Trade amount I will change to 0.1 million. Slippage, I think slippage of 2 pips is good enough. Then comes the question of defining stop loss and take profit. And for that, I think it will be better if we keep the stop loss and take profit as per the immediate price volatility. So depending on the price volatility, we will have the target price and take profit defined for us. And as we have already carried out one calculation where we are looking at the price difference of last 3 hours. That difference can come handy while defining this condition, and we will take that price difference, and the twice of it can be considered as the take profit, whereas the risk reward ratio needs to be at 1 is to 2. So I think the 100% of this price difference can be considered as stop loss, and the 200% of it as a take profit. So we will get the risk reward ratio of 1 is to 2, and as I said, it will be in line with the market momentum. So that is one of the best way to define this. Otherwise, you can go for a static stop loss or take profit also. All you have to do is hard code or simply write here the value. Suppose if you want to keep the stop loss of say 15 pips, then you have to remove this variable and write the value, and that will be your stop loss. And then similarly, the take profit can also be done. But for the dynamism of the algorithm, we can utilize these values which we have already derived at, and then utilize those. So we are going to do precisely that, and for that 2 more calculation expressions will be needed. I will take this and disconnect this one. All we need to do is look at this actual price difference and multiply it with the 10 raised to the power 4 to change this value from decimal points to the integers, and that value will be our stop loss. And since we are working with the USD JPY, it should be 10 raised to the power 2, as we have 2 decimal points in the value of each peep for USD JPY. In case of Euro USD, it should be 10 raised to the power 4. So here I will create a new variable, peep conversion factor, and it should be 100. This is going to be A1 into A2. This is going to be buy side stop loss, and its value will be result of this calculation. Take profit will be simply twice of it, and as I have already created this variable dxtem which has the value 2, I will use the same variable and multiply it with BSL Okay, so again A1 into A2, and this will be buy side profit. So far so good. Let me now take this block where it belongs and join this here. And we will also color code this to make sure. Okay, so in this session the buy side has been completed for this algorithm using the DX directional movement index along with the price action, and for that we are relying on the get historical candle. In next session we will be simply define the sell side, and with that the algorithm setup will be complete. Thank you all for joining in. I hope you have been able to understand these developments so far, and do subscribe to the Dukascopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.